We know coming into 2022 that is going to be a tough year. It's going to be a different year. Not really tough, but different year. But as we get into February, early March, well, it was evident, especially looking at inflation and how the market performed since the beginning of 2022, that it was going to be a very interesting year, especially for the hedge funds. Well, as a matter of fact, we do have an example today, and it's precisely what I'm going to share with you because it's going to give us an insight of what may happen next to some of the hedge funds that are heavily invested in a specific type of stocks in the market, hence causing them to be again cornered in a situation where it might be the end for them and the beginning for AMC. Investors to pull out $250 million from hedge fund Q2 management. Well, this is an investment firm or a hedge fund that is managing almost $60 billion as of December of 31st of last year. Investors were trying to pull out, meaning we want the money back, man, to pull out $250 million from hedge fund Q2 management. However, the hedge fund is not allowing the clients to cash out in full. Sources say Q2 management is withholding $33 million from client redemptions. Well, what does it mean exactly? Well, when you invest your money with somebody else and you give them a mandate, you give them the authority to manage your money on your behalf, well, they invest in what it's supposed to be bringing you decent amount of returns. But when it comes to hedge funds, it's a little bit different because hedge funds are supposed to be the guys when they move like a whale and it makes a lot of splash, meaning whenever they go somewhere to invest, you can expect to have more than decent returns. But the problem is, since the beginning of this year, the market has been not doing so well, especially in one of the sectors where we have the favorite stocks of hedge funds. I'm talking about the Nasdaq. I'm talking about the tech sector. And you can see here, even though this amount is not a ridiculous amount of money, the thing is, Q2 management is down 11% this year through March. So investors are really seeking redemptions because the performance is tanking. Well, the thing is, and this is where it gets very interesting, this particular hedge fund is not the only hedge fund in this specific situation because not everybody, but almost everybody has been, seeing performance decrease since the beginning of this year. But when you are holding stocks that are now down 70% down to date, when you are holding down that are 80%, 40%, 30% down since, the highs that I experienced back in 2021, well, because they're moving with a lot of money, it's kind of also expected that they will have, a lot of money that they're losing at the current time being. Especially when you look at how liquidity will be drying up and has already started to dry up, especially with people positioning themselves now to look at, well, how can I make sure I protect my money against interest rate increasing? All right. There's going to be a shift, and that shift has been happening since February, mid-February, early March. So it's not a surprise that these guys are facing this situation because investors are looking to actually find a place where they can not stop losing money, all right, and put it where, recession-proof or inflation-proof can actually help them, if not make some decent gains to protect their capital. But this specific hedge fund used to put money into private companies, into side pockets. And the side pockets gained attention during the financial crisis when hedge funds clients sought to redeem hundreds of billions of dollars. So to avoid selling assets at fire sale prices, funds push the holdings into standalone entities with the aim of selling the asset at a higher price in future. In other words, these clients aren't getting this money back until this hedge fund, Q2 management, feels it is safe for them to release its securities. So we knew that coming out of 2021, bunch of hedge funds saw this coming. And because they saw this coming, they decided, you know what? Let's put a fee on, withdrawing money to our clients. And for some of these hedge funds, the withdrawal fee was going up to 10%. All right. But the thing is, it doesn't matter because where the market is kind of heading towards, we may end up to a situation where even without a hectic fee to get your money back, investors are going to say, you know what? I'm out of here. Give me my money because I need to put it where I feel it's safe. Maybe they're going to put it in the bond market. And what it means for AMC stock is, well, these hedge funds are going to be left with a pretty hectic problem, because in some hands they are losing money on the holdings they have if they don't shift it. But on the other hand, people are moving money out of the business, meaning they are facing very tough challenges ahead, but they cannot continue to operate the way they did so far because money was cheap. And because money is going to be cheap anymore, well, what do? If you can't prevent liquidity from drying up, if you can't prevent people from withdrawing money from your funds, and the market is not going along your direction and your strategy is just whack, what do? Well, you start to look at the positions where it's the most painful, and one of those are AMC stock, because those are the highly shorted stocks so far in the market, even more than what we could see on Ortex with the short interest ratio in percentage. So bottom line is getting tougher and tougher for them. We already knew, but this is not old news. This is what happened currently. This is new news. This is new information. So again, maybe some people are doubtful about the recent run on AMC and think it's just we've been here before, but maybe not. Maybe yes, maybe not. But the thing is, who knows? Only time will tell.